In this lesson, we're going to do a demonstration on buying a dividend type of stock. And with all these kind of demonstrations, I'm not recommending any particular stock or anything of that nature. Really want to just show you some of the process that I might go through or others go through so you can use it for yourself when you're looking to make your own stock picks. And in this one, we're going to look at dividends, and we're going to look at a dividend stock. We're going to focus on the healthcare area and large pharmaceutical just as a demonstration and really show you the whole thought process behind it, both quantitatively and qualitatively as well. But first we'll start with doing some basic research on some stocks and using the screeners to kind of narrow our choices down so we can really focus more on learning about stocks that might pay dividends in the category we're interested in that might be of most interest to us without trying to search through thousands of stocks. So let's get started with it, and let's start with using FinViz, the advanced screener here, to take a look at that. Okay, let's go ahead and take a look at narrowing our choices down. First off, as far as looking for a dividend-paying stock, I'm looking here at FinViz, a nice good advanced screener, finviz.com/screener. And as you can see, they give you lots of different choices and things you can use to narrow your choices down to kind of identify and then research some stocks a little bit more. Because right now, if you look at the bottom, there's 359 pages plus of 20 stocks on each page from all over the world, USA, France, Canada, and more, all beyond Europe, you name it, they're there. And we need to narrow this down to kind of help make our choices. So for this education thing, I'm not recommending a particular stock, just going to use it for education, how we walk through maybe how we might want to look at a dividend paying stock. And we're going to say we're looking at the healthcare area in pharmaceuticals, drug manufacturers. So first thing we do is we could pick our sector, right? So we go here in the middle here under sector. You got different sectors like consumer goods or financial or technology, you name it. But let's say we want to go to healthcare here. So we're going to click on healthcare, and voila, it's already changed. It's updated. You see the sector is now all healthcare in this column here. Our choices are now down to like 38 pages there. Still a lot of choices. So we need to narrow that down further. So let's say we want to look at large drug manufacturers. So we're looking at drug manufacturers major versus, let's say, medical devices or something else. We're looking at drug manufacturers, large pharmaceutical companies. And you can see we're starting to see a lot of name brand ones here. We still got a lot of choices though. So let's say we want to narrow that down even further. Well, since we're looking for a dividend stock, we should look at dividend yield. I mean, if it's not paying a dividend, we're not interested in that. So let's look at dividend yield. And maybe we want to put in a number for a certain amount of a dividend. We went over a 3 or 4%, pretty high dividend. Let's say, just to start off with, we want at least something that pays us 2%. So we're looking for a 2% dividend. And now our choices are even smaller, right? Now we're down to 10 choices that we can continue to research as far as stocks that are in healthcare, large drug manufacturer, that pay at least a 2% dividend. So any those stocks that don't pay a dividend at all or less than 2% on the yield, getting us a return of a 2% return with the dividend, those have been eliminated. So now we've narrowed our choices down. And maybe I want to look at a certain market cap. Maybe instead of these 10, I just want to look at some big companies, the biggest of the big, because I want maybe I want a safe company, a company that's a pretty big company that's been paying that dividend for a long time. So I could choose like large cap, mid cap, small cap. They even have a category for the super big, mega cap, so which is an extension of the large cap. So let's go to the mega and let's see what happens with our mega. Okay, well now we're down to 3 choices here and 3 big name mega cap drug manufacturers here. We've got Johnson & Johnson, Novartis, out of Switzerland, and Pfizer. Big drug companies, big international drug companies that do a lot of things. You probably might recognize some of these names, if not all of these names. So these are all paying this 2% dividend, so I've narrowed those choices down a little bit. If I wanted to, let's say, go out even further, I could go beyond some of these things. I could go under fundamentals, and maybe if I'm looking at a dividend stock, things that might interest me might be the payout ratio, which is over here. You can look at price to earnings, and the PEG ratio is great here. If you're looking for a value type stock, you want to look at PEG ratio, price relative to its earnings growth. You'd be looking for some of the low price relative to its future earnings. But let's say we're looking at payout ratio, which basically will tell us, what's the likelihood that they're going to continue to pay that dividend? How much of their earnings are they paying out in their dividend? And we typically like 70% or less as far as paying out on the dividend. So let's see if anybody qualifies for that 70% or less. Certainly 60s and 50s are even better, but let's do 70%. Okay, so Oh, wait, I chose over 70%. That's the wrong way. We went the wrong direction. So we don't want that. We want somebody who's paying under 70% in their dividend payout. And that left us with just Johnson & Johnson, actually. So, you could, I'm not saying that's where you make your choice. You want to look deeper into three, but it's interesting that they're all paying dividends, but Johnson & Johnson's only one under 70%. If we were to go down further, if we were to say, gosh, is it even under 50%? No, you see, we have nothing there. So it's not super, super duper low. Let's go to 60, just see if it pops up, if it pops up there. And it does. So we know it's at least under 60%. So that's a pretty good payout ratio. But since we want to look at these other companies, let's leave that at any right now, because we want to still at least show these other three companies, even though they might be paying a little higher than a 70% payout ratio. That's not the end of the world, just something to be aware of. Okay, so I've got information in there. Maybe from a technical standpoint, I want to go in here and I want to narrow my search down further, and I'm looking at beta, and maybe I want somebody who's going to be at a beta of 1, of 1 or less, or if it's at 1, it basically is the same risk or volatility as the market as a whole. So, things, if you want something less risky, which you might in a dividend stock, you might want a beta under 1, for example, less risky or less volatile than the market as a whole. Let's see if that does anything with our updates. And they all have a beta under 1. So that's great news. So, not real volatile stocks. They're not going to not be real risky stocks. They're going to pay that solid dividend, at least 2%. Big companies, though I did like the Johnson & Johnson having the low payout ratio. But now let's look further. Now we've got maybe 3 companies. We've narrowed it down to, you can see on this overview tab, this middle ribbon here is how we're going to compare and look at more detail now. Now it's the next step. We've narrowed our choices maybe to 3 with Johnson & Johnson, Novartis, and Pfizer. You can see some initial numbers like the price to earnings. You can see Johnson & Johnson has a lower price relative to its earnings. That makes it a better value in terms of stock as far as what you're paying for it versus Novartis and Pfizer. And you can, kind of see volume and some different numbers as well there too. So let's just start going through this ribbon here, because this is going to maybe show us some more stuff. First is looking at valuation, some of these valuation ratios. We looked at that price to earnings. We saw that was lower. You can see in terms of market cap, Johnson & Johnson is even bigger than Novartis and Pfizer in terms of market cap, much bigger, big established company. Forward-wise, looking forward for this price to earnings, Pfizer looks like it's going to come down as far as its forward-looking price to earnings. Once again, that PEG ratio, if you're looking for something that's a lower price relative to its earnings growth, that's really true when we look at value stocks. So if you want a little value part of that, maybe something that's a little bit on sale, you can see Johnson & Johnson does well there too, lower than the other two as far as price relative to its earnings growth. And you can see these other valuation ratios too. Price to sales, price to book are the 2 big ones, price to cash flow. And once again, with those types of numbers, you want it to be, lower price relative to its sales, relative to its actual book value. And you can see that's where they diverge a little bit. Pretty similar here in sales. Pfizer a little better. Price to book, nice value here with Novartis. Though once again, its PEG is pretty high too. So I would, be wondering about that, in terms of pricing. And then you can see like earnings per share over the next 5 years, earnings per share, growth and all that. And you can see some okay numbers there. And so it looks like they're making money. And so these are big drug companies making money, which is something we want because we want them to pay our dividend. Now we want to go to financial. Let's look at financial. And you can see the dividend payout ratio. So we said we wanted it to be at least, not dividend payout ratio, dividend yield, or how much is the dividend going to pay us in terms of, we almost think of it like an interest rate, how much is it going to pay us a return on our dividend if we own that stock per share of stock. And you can see we wanted at least 2%, and that's how Johnson & Johnson got in the mix, because they're at 2.69. But Novartis and Pfizer are higher. They're at 3.34 and 3.50. So right now, if I was to buy those stocks, Novartis and Pfizer, I'd be getting a dividend yield above 3%, or a little better than Johnson & Johnson. So yeah, Johnson & Johnson has a better payout ratio. They're more likely to continue to pay their dividend possibly. But Novartis and Pfizer are paying maybe a little better dividend. That's not the whole story. We want to look at what might happen with the price and other things. There's a lot more factors. But right now, if you were looking just at yield or chasing the highest dividend, well, the winner there is Pfizer. They got the highest dividend. But as we saw, there were some other concerning things with them. If you look at like some of those financials like return on assets, return on equity, or return on investment, I mean, you can see, yeah, Pfizer pays me a nice dividend, but look at these other numbers, which might lead to a higher stock price and certainly better safety and things in the future. Johnson & Johnson is just killing them in these other numbers. You know, bigger number is better. And if you start looking at, let's say, the quick and the current ratio and the quick ratio, which is short-term debt, can I pay my short-term bills? You want that number to be higher. You can see, once again, Johnson & Johnson killing them again. You know, so I'm taking a little more risk possibly here. We'll look at risk, we'll look at beta in a second, but you can see I might get a little more dividend, but I'm giving up on some of this potential price appreciation or taking more risk. Now, unless Johnson & Johnson was carrying a ton of debt or something long-term, and they're not. They're all very low in long-term debt relative to their equity. So those are all really nice, good numbers. I wouldn't be worried about any of them. They're all very good in terms of their long-term and their overall debt to equity. Profit margin, another key number that we'll look at. You know, that means each sale you're making a little bit more on each sale. Johnson & Johnson running a little bit higher, well, not a little bit, a significantly higher profit margin, which means as they make sales, they've got more money flowing to earnings, which means that money can flow to our dividend, and maybe there's a chance of them raising dividends, and that's something we want to look at if we're looking at dividend-paying stocks or be aware of. And this is just relative, you know, short, you know, current prices and price change. We want to look at more a longer-term performance, which we will in a second. All right, so Johnson & Johnson, lower dividend, but a lot better in other numbers. Right now is how I'm seeing it. Right now, that's what I see. Recommending, I'm just saying this is what we're seeing when we narrow this group down. Ownership gets you an idea of, you know, how much is in-share shares, how much institutions own. You can see, you know, a lot of these are owned by big mutual funds and all that are things to look at. Opposed to Novartis isn't, but others are. And then we click on performance here in this middle ribbon, and this gives you some more recent numbers. Short-term things, then this is just a moment in time. So this could be, when you look at this, you know, every day the price changes, so these numbers change, so don't try to replicate this. But when you look at it, you'll see these numbers. It'll give you like the previous quarter or performance for the quarter or half year or year or year to date. One thing when you look at, like, let's say like year to date, is think about where in the year you're looking at it. How many look at this later in the year, so this number maybe has a little bit more weight to it. Still, it's a very short-term number. Versus if I looked year to date in mid-January, well, that's only a few weeks. That's not going to tell me really anything. A better number, at least from what you can find from FinViz, from the initial thing, is a performance over a year, over a 1 year period. You still might want to look deeper into these stocks and look, you know, the individual sites, their plans, and look how they've done over the last 3 years and 5 years. Particularly, you might want to think about what are they going to do in the future, because that's really what matters. You know, is what's going to do in the future. But it's still an indicating number as far as, let's say, performance over the last year. And let's see, you know, Novartis is down 8.7, so maybe that's a good value buy opportunity. If you were, you know, thinking, well, they're down, maybe they're going to come back, they pay a dividend, maybe I can get them on sale a little bit. That's one way to look at it. Another way to look at it is maybe they're struggling and having a, you know, looking at those other like return on equity and looking at some of those other numbers, maybe they're just not being very successful. I'd want to look and see if are they having problems getting approval on certain drugs, or did one of their big blockbuster drugs now become where people can make generics of that drug is big in the drug industry. So what's going on? You'd need to dig deeper. But right now, they stand out as far as being negative, and maybe that's a buying opportunity, or maybe that's a stay away from them opportunity. As in, there's no opportunity, you got to stay away. Pfizer ran about 10% over the last year, and Johnson & Johnson, wow, up 31% over the last year. So at this moment in time, once again, anything can change on a daily basis, but it's showing, you know, there's some good recent performance from them. Technical, it gets into some of the real kind of technical, especially you get into like charty, you know, over a 52-week thing. What I look for in the technical is the beta here on the left. That's, once again, you want it to be less than 1.0 if you want a less volatile or less risky stock. If I'm buying like a dividend-paying stock, I want it to be, you know, something that can raise dividends. I want something to be maybe less risky, let's say, for example. You know, they're all under 1.0. They're all good. They're all going to be less volatile. You notice a little less than the others, but, you know, this is pretty negligible numbers. It's not like they're running like 1.5 or something, you know, big. You know, these are all, you know, less volatile, less risky stocks, things you can sleep at night on. Custom would be, you know, more making, you know, kind of custom type stuff. You have to, you know, you can get a little bit in there, and you can, you know, adjust type things. Charts is just going to show you a chart here, and you can see, you know, Johnson & Johnson over that last year, you know, pretty up, a little down. Novartis was up high and went, whoa, so something what happened, but they've come back. And Pfizer is down, and now they're kind of on an upswing too. So you get a feel for the chart. Tickers is just basically just their ticker symbols that we've seen here: Johnson & Johnson, Novartis, Pfizer. is all that is. And then this is just some basic information that you want to get the chart and then the detail information on one page, so you can easily scroll through if you want to just see it all real quickly without having to go through the different things. And then there's news and stats you can pay extra for and get more stats, or you can just go right into snapshot here and you get a chart, you get their summary, you get their news right here, whatever might be recently in the news. You get a little description of the company. So if maybe you know Johnson & Johnson, but you're like, I don't know much about Novartis. Tell me about Novartis. I'll tell you what they get involved with and some of the things they do, and at least give you a start on that. And the same with Pfizer. We know they're all drug manufacturers, but they might do other things. Like Johnson & Johnson, a big arm of them is doing things like in consumer goods beyond just being a major manufacturer of drugs. So this is the first step to kind of narrow our field down, into some choices, and you can research them a little bit more. Right now, I would say, Novartis might stand out. If I was looking at something that might be undervalued as far as, the price is down because their stock went down. But then if I look at their price relative to their earnings growth, that's higher. And so that would concern me. That would make me kind of stop. And I'd worry about their payout ratio being over 70% if I'm looking for a dividend stock. Whereas, certainly, Johnson & Johnson pays me that less dividend, a 2.69, but it's still a nice dividend, and it's a growing dividend. If I research into them more, and I have done research just in prep for this, Johnson & Johnson has paid out a dividend and raised their dividend for the last 53 straight years. I mean, that's pretty impressive. We're going to go to their website here just so you can see what they do. And so that'd be impressive. So I would weigh that pretty heavily, that they're going to continue to pay that dividend. Sure, it's a little less than Pfizer and Novartis, but maybe that safety of them paying it is real important to me. Also, if you qualitatively, if you know the company a little bit, you can learn more by kind of going into like their products and things of that nature. Here we'll go into consumer care products. Well, a lot of people know Johnson & Johnson, like Johnson & Johnson baby oil. If you know them for that, they do skin care, and this is beyond just their manufacture of the drugs. We'll look at that in a second, but you can see they got a diverse type of stuff they do. They do Band-Aids. Where I live, we actually call them Band-Aids. We don't call them wound care or adhesive care, whatever. We call them by their name brand, which is Band-Aid, Johnson & Johnson. How powerful is that brand of Band-Aid? So they have that. Listerine they own. Tylenol certainly is a big, over-the-counter drug that's out there, but they got some other big ones too, like Sudafed, Pepcid, Melanta, Zyrtec. Some of these, Imodium, you might know some of these in Envision Care as well. So Johnson & Johnson does a lot of different stuff, from medical devices, prescription products as well. The thing with Johnson & Johnson is, okay, now we've done some analysis with all three companies. We'd want to do the same thing, where we want to learn more about Novartis and Pfizer too, and what types of things do they do. And that's the thing. We've now done some quantitative or numeric type analysis and narrowed our choices down, which is a good thing. I'm not having to search through hundreds and hundreds of healthcare stocks, let alone thousands of overall stocks. I've narrowed it down to these three, but now I need to learn more about the individual stocks before I can maybe make a choice. If you think about things like qualitatively, there's some things I need to know beyond just the numbers. Like, myself as an investor, how smart am I in this industry? Do I know the pharmaceutical industry well, beyond maybe just taking some cold medicine or drugs? How well do I know the company and going on their websites and looking at their annual reports, looking at their forward-looking statements? What do they mean as a company? What are some of their strategies? What does the future trends look like? I know for, let's say healthcare in this example, future trends are people are getting older and they're living longer. So that means they're consuming more healthcare products over their lifetime. That's a good thing for pharmaceutical companies. That's a win that will help their sales, so to speak. And overall, all this, it's got to fit in my portfolio. If I have a portfolio of 90% healthcare stocks, I probably don't want to add one more in there, even if it's a pretty good one. And not to get caught up in things like what's hot or what's cool or what's maybe a product I like. Maybe I had a headache and I took some Tylenol and boy, it cleared up my headache. And I'm thinking, wow, that Tylenol is great. Who makes that? Oh, Johnson & Johnson. I'm going to buy their stock. Because it was a great stock, or maybe I liked another product. Pfizer makes Viagra or something like that. Maybe you like that. Whatever it might be. So the thing is, it's an art and a science to investing in stocks. Of course, the things will help you with that and doing this analysis. And with anything, particularly like a dividend stock, you want to think about, why am I buying this? And what are the dividends going to do for me? Am I going to reinvest those dividends? And really think about where it fits in that overall portfolio, and importantly, overall in your goals. But here was an example of, as far as buying a dividend stock. You could then replicate this in different industries or looking at different stocks. You can do this lots of different ways.